the very first reaction that government will do most of the time is to tax, which I think should not be the knee-jerk reaction. The first reaction that should happen would be to fill the capacity gap. If we don't invest in training our talent, in ensuring that people actually have access to these platforms and phones, then we're still going to experience the same inequalities we experienced from time immemorial. So I think it's important that we answer the question that is the continent really ready? If we talk about readiness, I think that in really taking, being part of this fourth industrial revolution, being partakers of the of Web3 or being, innovators around that, we can't do it if we don't invest in capacity building. They still need to teach people about the internet, access to the internet, access to these platforms. We need more developers that are developing these things. And also we need to be training, our universities should be ideally looking at how do we change our curriculums to ensure that we get to this point. So those that are working around, those of us who are working around economic justice, we must look at ways in which we can really get the budgets going towards capacity development. And that the lawyers that's what we're really trying to do, that do people really understand these issues before they regulate these issues? Do parliamentarians understand? Do policy and regulators, do they really understand these issues first before we tax? But then two, to answer the question around tax, would be to look at, I think the top two models that I'm seeing in terms of taxation is on income tax. If you're making any sort of income, different countries, and you can check this out on I think crypto.com has a bit more of this information on which countries are taxing and in what way. Cryptofinder.com as well has a bit more information on how different countries are looking at the tax approach. I think finally it would be good to also look at cbdctracker.org. They're also looking at how these different models are working. But I'd say capital gains tax mostly, income tax, and also VAT, the value-added tax, especially at the exchange rate level where people are doing exchanges. So that's how you can sort of broaden the tax base. My other question, I think that really, got home was about the feminist issue. If you check out just a random search of, crypto founders, and you look at the images on Google, the images that are going to come out are actually male founders. And it follows how capital, especially in the tech ecosystem, moves. Capital is mostly Silicon Valley, is white, is male, is old. It's not female, it's not black, it's not poor. So how do we change those, traditional inequalities and make sure that we actually partake of this? I think it's simply looking at what is our system. How do we create our own, if you're looking at in terms of stable coins or virtual currencies, are we looking at modeling our own currencies in the sense and not backing it up or, premising it on something else or another continent, especially the global north, in the sense. There was, I think, a survey that was done online about who wants to trade in crypto. I think it was by crypto.com, and they said that 19% of women from the age of 18 to 29 said that they're actually trading in crypto. And 43% of men said they're actually trading in crypto. And so if you look at in terms of risk and you also look at in terms of access to these things, most of the men would ideally be in crypto and would be owners of crypto, unlike the women. My final question that I would maybe want to answer would be, I think the question that came up was on all these regulations and why are governments really apprehensive about these virtual currencies and what do we do about it? And I like what my fellow speaker talked about, the context that these digital economies, even online, follow the things that happen offline. I am in Kenya. We had the terrorism attack at the Westgate, and so many people died. I think 67 people died in that raid. And when you look back at the case and, just following the case in court, if you look at the issue here was about KYC, know your customer. How are people registering for SIM cards? The continent is coming up with digital identity laws to follow privacy laws and also to follow digital trading laws. The Africa Free Trade area, the additional protocol now on e-commerce really is going to bring some of these issues to fore on digital payments. And two, also on digital identity, that how do we know this person says they are And how do we confirm this particular identity and be able to fix all these identity issues. I think that as a way forward, one of the things that we must demand for is not really to settle for the thinking that we already have laws, and so we don't need any more laws. I think we need very sector-specific laws to be able to curb these issues that are coming up. That already we have laws on AML, but do we have sector-specific laws on AML for exchanges? And so we don't necessarily need, as a country, for instance, to take up cryptocurrencies as legal tender, but how are we doing very sector-specific regulation that will be able to help us to the next level? And the question that I asked on how we can make this as a continent useful for ourselves is to keep pushing the boundaries and asking that if government is setting aside money for research and they're setting aside money for all these sector-specific sandboxes, that is this money really going to answer the crazy ideas that we have, the crazy ideas that Ali is pushing forward in this meeting? Is that government actually putting money into it, or is continuing to really follow the traditional patterns that money followed, and that money has really not helped us? And so I would recommend a hybrid approach that ensures that we actually get the stability that central banks are offering, the consumer protection that central banks are offering, but then also looking at the feminist approaches that will be able to help us, that money gets into the hands of both genders, or either genders that exist. That we also look at ways in which we are able to be stable as a continent, to be able to support our own financial institutions in that case. So I think a hybrid approach, in my view, will be able to handle these two competing factions. Thank you.
No matter how well we will develop central bank digital currencies, or how well we develop crypto assets, stable coins, and so on, these are not substitute for good policies, and that's very important. So at the end, if the government creates a digital currency, it will still be the national currency, and its stability will depend on how good are the macro policies, in particular modern fiscal policy. At the same time, people were saying before, okay, maybe I can transfer money more easily, but I need to have money, and that comes from development. So at the same time, what's essential is to continue the development policies that allow people to get richer and therefore benefit from digital transactions. Digital transactions by themselves will not make you much richer. They will help you a little bit, getting more efficient. So to me, this is the most important message. These are complements, not substitutes for good macro policy and good development policies. There was a question of risk of predatory lending. I fully agree that that's potential risk, like the other risk I was mentioning before, that investors are not capable of managing assets volatility. This risk need to be managed together with other risks that we didn't have a chance to get into, with proper and adequate regulation. So what's important is that governments really study carefully what is the adequate regulation and the adequate design of central bank digital currency in case they want to get into it. And let me give you one example of one very important point that was not mentioned because of lack of time today, which is interoperability. Countries like Kenya and Nigeria know this very well. In order to develop a system, you need to have interoperability between different agents that use different platforms, if they do. And imagine the same thing across countries. If you want to transfer digital money from one country to other, you're going to have to need interoperability. So that requires both within country and global cooperation to develop that. There was a question about what does all this means for Africa. And let me mention three main points. One is massive financial inclusion, like we have already seen. Of course, I agree there are issues about pockets and important sections of the population, like the female, the youth are less, have less access to cell phones or internet and so on. And that will have to be a design which is at the national level, understands the cultural and social issues underlying these issues. But nonetheless, inclusion is increasingly being brought up within Africa by the digital revolution. The other thing is efficiency and lower transaction costs. You can imagine farmers that sometimes have to spend an entire day moving from their farm to the city bank just to deposit the amount of money they made from selling. That will disappear as long as they have internet or cell connection. And the other point is remittances. Remittances have become already one of the largest financing tools for most Africa, as in par with private sector capital flows. And remittances will be incredibly easier if people don't have to go to Western Union or other companies that take time and also charge a certain amount of money, and maybe they will be able to do this more easily just with a click of a button through a cell phone connection. With respect to broadening the tax base, Linda already spoke a lot about that. Let me just say that if there is a broadening of transaction done through digital system, that will make it not only easier to do this transaction, but also easier to pay taxes on these transactions. And so that will reduce also fiscal evasion, which would allow government to have a broader tax base and distribute the tax burden a little bit more fairly and more easily.
One, I think that regulation is not a dirty word. Many a times when you have this kind of innovation and then you mention regulation, it is all these are government out to kill innovation. I think that there could be a balance. And usually what we note in any new innovation that is coming in the country, the reaction of government first, they start from resistance and then move into ignoring it, then move into regulating it, and the more that sector grows, they move into supporting it. We have seen that in the case of for example, digital services. We have seen that in the case of Ubers in many of our countries. The very initial reaction was to try and resist it, then okay, let's not do anything about it, and then let's put some mechanisms in place to regulate it. And now there are specific efforts by some of government to try and ensure that how can this become a sector for growth and job creation. And this, I think, will apply to all other sectors, including the financial sector and the cryptocurrency sector. So I think that what we need to do is strike the balance between an effective regulation that supports innovation. And we look, for example, and that's why I'm a little bit hesitant when we have this conversation about, no, this is no free market, this is the more deregulated, the more decentralized it is, the more it can grow. And we saw, for example, the global financial crisis. That was the foundation of such a crisis that has huge implications on the continent. The second point is that these issues are interconnected. They're interconnected between the real economy and the financial sector. They're interconnected between the domestic economy and the global sector. And I think it will be dangerous to lose sight of that. And this, for me, why I really like to emphasize the point that even when we talk of global regulation of the cryptocurrency, the questions who is sitting on the table in determining those, making those decisions. And what we have seen historically is that when you let the OECDs and the FATFs and others make regulations, usually those are regulations to the disadvantage of developing countries and African countries. So they need really to ensure that we are making this connection when we talk of global regulations, that we are also on the table in those spaces where this kind of the global regulation of the financial sector is happening because of its connected on domestic markets. The third, I think connecting it to conversation we had this morning, the effort to restructure or reform the African financial architecture should be cognizant of this conversation we're having about digitalization and the digital economy. I think, Jason, when you start making the opening remarks, you said this session might appear disconnected. It is at the heart of it because we cannot establish these institutions that are not cognizant and not aware of the development and the rapid growth that we are seeing in the digital sector and the digitalization of our economies more generally. So making those connections about all these issues, about monetary institutions, about investment institutions that the economy needs to establish, how are those vis-a-vis our increasingly digitalized economies? And lastly, I really insisting on this in response to the question that Vitalis raised. As effective as your financial sector is, if you are not manufacturing, you are not trading. So really connecting that to the real economy is at the core of this. They don't exist in the cloud as much as they do, but they need to be connected to bread and butter issues and the manufacturing and the role of women in the creating an inclusive framework. I think this is important to emphasize that.
First, on predatory lending, I think that horse has bolted. There has been a serious influx of predatory lending in the last few few years, mostly based off of mobile money and just mobile money penetration. What has happened now is more countries are starting to come up with laws around digital lending. Kenya recently passed regulations on digital lending, and what this does is ensure that digital lenders do not price their products to be so predatory and so undermining to the people who are accessing those products, because the biggest reason digital lending has grown so fast in Africa is because more people have access, it has access to the unbanked. You cannot go to your bank and ask for 500 Kenya shillings, but you can go to a digital lender and ask for that same amount. So there's a lot of unbanked people who've benefited, but who also need to be protected, and the only way to protect them has been through legislation, which has started to happen. On the informal sector, I'm not sure we would want to really, or it would actually be possible to formalize it, because formalizing means then moving from the informal sector, and I think the informal sector is really the backbone of our economies. And the informal sectors would be what we call juakali, those industries. And for them, the benefit is actually the efficiency of their financial transactions. It's very effective, it's cheap, it's affordable, let me not use the word cheap, and it's accessible. It's also faster for them to be able to transact without spending a lot of time trying to approach a bank or to access a bank or to even access loans and funding. With regard to where we are on blockchain, to be honest, I do not think we have made progress as a continent with regard to adoption of blockchain. Some of the reasons we have not made that progress is because, for the most part, people do not understand what blockchain really is. And I think 2 years ago, Kenya commissioned a study, and there was a committee that was going to look at what blockchain can be used for in Kenya. And there were proposals, but that has not been adopted. But the biggest benefit that we would get from blockchain would be its transparency, which I think, as people who want to move forward, transparency and efficiency are really important for us as a continent.
Decentralized finance. Somebody asked, what's in it for Africa? Let me give you some very interesting statistics. $300 billion is the finance gap for micro, small, medium enterprises in Africa every year. $300 billion. Then let me give you another number that was bandied around here in the morning with that thing called SDRs. 30 what? 33 billion. There is a decentralized finance platform, just one, and there are many, that has a liquidity that changes on a per minute basis. The liquidity on that decentralized finance platform, where you, myself, and my grandmother can put in as low as $10, as low as $5. And the fact that I'm talking in dollars is also a testament of the problem that we have in Africa. I shall not go further than that. That platform has a daily liquidity of between 10 to 20 billion dollars. One platform. Those guys are virtual. And here, one whole continent is talking about $32 billion. I mean, come on, guys. Can we just elevate our thinking with all due respect? We have micro, small, medium enterprises who are mostly, by the way, women, and youth who have a financing gap of $300 billion. Then, you know, there's something that we forget. Nature abhors a vacuum. Where there is a vacuum, it will be filled by all sorts of filth until the clean stuff comes in. That's just the rules of nature. So when we talk about predatory lending, I hear a lot about this term. Let me give you a very interesting real-life story in Kenya. Young guy wakes up in the morning at 4, goes 20 kilometers from Nairobi, where a place that's famous for planting, farming potatoes, picks potatoes from the farm gate, comes into Nairobi Central Market, sells them, makes some money. At 9 o'clock, he's back in university. That's how he's paying for his university. All right? That guy had no access to finance. Zero. Then M-Pesa, M-Shwari, and other digital lending platforms came in. That guy had immediate access to 30,000 shillings every day to trade. With all due respect to all do-gooders about predatory lending, where were the banks when this guy needed money? Now this guy has money. We are all talking about predatory lending. Where were you when he needed that money? I'm not saying we shouldn't discuss those things. I'm saying going back to the issue around nature abhorring a vacuum. Let me give you another true story. Anyone has heard about the Small Business Administration in the US? SBA? Anyone? The Small Business Administration is a US government agency that focuses on empowering micro, small, medium enterprises. And guess what? The head of the SBA is a cabinet level position. Cabinet level position at the White House. Let's talk about serious policy interventions like that. On the issue of cryptocurrency and illicit financial flows, let me tell you guys a fact that you can take to the bank, no pun intended. The most prevalent tool for illicit flows and terrorism financing is cash. As we call it as my fellow Kenyans in the central province of Kenya will call it, fari fari. Cash is the most prevalent form of illicit flows. I'm not seeing any central banker banning cash. So let's be open and prudent in some of these conversations. I want to talk about the youth bulge in Africa. Are we paying attention to it? Or are we just paying lip service to it? Let me give you some numbers. The Africa tech ecosystem last year raised $4 billion. Does any policymaker in this room aware of that number? $4 billion. Do you know where the majority of that money is coming from? We are back to having serious discussions of the Berlin Agreement, where Africa is again being dismantled. We're not even aware of it. That's the saddest bit. Flutterwave, which is one of the largest fintechs in Africa today, is worth more than the largest bank in Nigeria. Guys, I can go on and on. but feel free for us to have conversations over dinner, over WhatsApp, over conversations. I am really happy and very passionate, but I'm not selling anything. I'm selling Africa here. I'm selling the future of Africa. I want all of us to open our eyes to the potential of digital currencies. And by the way, let me just say one last thing. If the regulator in Kenya was not forward-thinking when M-Pesa was founded, we would not have M-Pesa today. The banks were lobbying to put a stop to it. The regulator at that time said, no. Let's see where it goes. Let's see. We'll monitor. Let's see. But we're not stopping it. Guess what? Today, M-Pesa has eaten the lunch, breakfast, dinner, and teas in between of banks in Kenya. Why? Because they have taken this personalized. I mean, if you want to talk about CBDC in the true sense, there's no better CBDC than M-Pesa.
We call for policies and practices that put people first. We call for policies and practices that put people first. You and I are the people who hold our governments to